This is a Forex Preview. Thank you for joining us at XM.com. We'll be looking at U.S. data coming up this week. The latest U.S. inflation report refueled expectations by the markets that the Fed will have to pivot in its tightening cycle, sending the dollar to 7-month lows. But how could the dollar react on this week's data? I'm Cristina Marujos. With me today is our senior investment analyst, Geralambos Pissouros. Geralambos, the December retail sales and PPIs are out on Wednesday. What are we likely to see in the data, and what could that reveal about the U.S. economy?
Hello, Christina. Indeed, last week's CPI data added credence to the view that inflation may be on a sustained downtrend and that the Fed would eventually need to cut rates later this year, even as some officials continued arguing after the data that no cuts are on the table after interest rates hit their terminal level. Now, this week, both headline and core retail sales are forecast to have declined further and more than in November. Specifically, expectations are for both rates to slide to minus 0.8% month over month and minus 0.4% month over month, from minus 0.6% and minus 0.2% respectively. This means that consumers are becoming more reluctant to spend, which could bring inflation further down in coming months, something also supported by the PPI forecasts. Both the headline and core PPI rates are expected to have continued declining, with the monthly headline print expected to tick into the negative zone, just as the CPI rate did. Having said all that, though, deteriorating consumer demand also means softer economic growth. Releases relating to economic growth prospects have been worsening, with one of the latest examples being the ISM non-manufacturing PMI for December, which fell into contractionary territory for the first time since May 2020. Coming on top of the further contraction in the manufacturing sector, a shrinking service sector, which accounts for around 77.6% of US GDP, is anything but encouraging. So another soft retail sales data could ring more alarm bells.
And now let's turn to the market reaction. Do you think the dollar could retest its recent lows this week?
Now, expectations of softer inflation blended with concerns about the performance of the US economy could further solidify investors' opinion that the effect of the prior interest rate hikes may not be fully reflected in economic data yet, and that consequently interest rates may need to be cut at some point later this year. This could result in much more dollar selling, especially against the euro and the yen. With underlying inflation in the Eurozone continuing to accelerate, the ECB is expected to keep raising interest rates more aggressively than the Fed from here onwards. And as for the Bank of Japan, last week's reports that officials may proceed with additional action at Wednesday's meeting to correct distortions in the yield curve added to speculation that the Bank of Japan may be starting its own tightening crusade at a time when the Fed is headed for the exit. Now, from a technical standpoint, euro-dollar has broken the key resistance, now turned into support of 108 after last week's CPI data. And another round of soft US economic releases could encourage the bulls to start driving towards the 111.75 territory, which acted as a resistance on March 31st and provided strong support between November 2021 and February 2022. Now, on the other hand, stronger than expected retail sales could encourage some dollar buying and perhaps take euro-dollar below 107.15. However, the pair would still be above the uptrend line drawn from the low of September 28th, and thus such a retreat may be seen as a corrective move before the next leg north. For the outlook of euro-dollar to shift to bearish, a clear break below parity may be needed.
Geralambos, thanks so much. This was a Forex Preview on US data coming up this week. Thanks for joining us at XM.com.